Good morning, everyone, and welcome to the European crossover webinar. And we had seen the euro as well as the cable going and take a dip here. You can certainly go in and see that right here with the euros. It broke the trend line here, and as well as the cable. And we're looking at the futures, looking at the 6E with the euro here, and then of course the cable right here with the 6B. We did have data that came out this morning, UK data that came out essentially 2 hours ago, which was GDP. And that came in pretty much in line, a little bit weaker than what was expected as far as the poll. Looking for 2% lower, they got minus 2.2. Business inventories came in at negative 0.3. Current account was somewhat weaker than what was expected. Then a little bit later on, we did get French consumer spending as well as Spanish GDP. Now, the French consumer spending, that came in pretty much in line, and then Spanish GDP came in right to what they were expecting, negative 5.2%. We don't have any data in this hour. We do at the top of this next hour. We will get Italian consumer prices as well as HICP flash for the Eurozone. And about an hour later after that, we'll get Italian producer prices. But as we come into the States, we will get Canadian GDP, so it should provide a little bit of a good mover there. And then we get, and that's going to be at 8:30 Eastern. And then at 9 a.m. Eastern, we get Case-Shiller. And at 9:45 Eastern, we get SHI PMI, Chicago Purchasing Managers Index. As well as at 10 a.m. Eastern, we will get consumer confidence. Let's go move this out of the way. You can see the euro working up a little bit higher after coming down here, at least as far as the 6E, which is the futures, coming as low as 12.24 or 12.23. We've kind of worked our way a little bit higher here, but you can see here we broke that trend line, and that really opened the door for them to move lower. Move lower they did, to the tune of about 25 ticks in this case. Since the futures is going to be ticks, with spot is going to be called pips. You see a little bit of a rebound here. We did get a little bit of just on a very short-term 1-minute chart, got a little bit of a buy signal. We've seen some follow through here, and really just a little bit right there, 42, 43-ish is where there's a little bit of resistance here. And we've just about come up here against the same day VWAP here on the euro. But once again, we took a pretty good knock-in. Yesterday we were pretty close to the 61%. We didn't quite get there, but we came pretty doggone close. And from there we faded off quite a bit as the dollar took off. And we kind of languished here all during Asia. And then we started to break lower as S&Ps broke lower, and we'll get to that. You can see here, we're just challenging just above here, right here, same day VWAP. Looking at the cable, same thing, we're attacking right here, same day VWAP here. A little bit of a hammer on the cable, 6B, which is the futures, right here. And they're trading at about a 5 pip/tick difference here between the spot and the futures, but you can see a little bit of a mini hammer on the 2-hour, and we're pretty oversold. We come into a 78% yesterday, right in this area. I think it's 22.74 was at 78%, and on even a much even bigger time frame, if you look further out, we can see it on the spot, but a 38% from what were those lows that we had, a few months back. So rather oversold. Maybe we'll see what we can go on and get a little bit of a push up. We are seeing it right now here. You can see here with the cable and also with the euro. Taking a look here with the gold market, we did go on and see that market come off. This morning, as the futures came off in the spooge, we took a quick little dip here in the gold market. We'll go on and move into the futures just to see where we stand there. And when I say the futures, I mean the equity indexes. Actually breaking down a little bit further here. You can see here that we were, when we had closed up higher on the day yesterday afternoon, we were kind of bumping up towards this. I even posted this here. We've got this 3062. I said that was a pivot, and 3060 to 78%, and we just languished there all throughout Asia. And then as we came in, then we basically took a quick little dip, and it's been under pressure since then. You can see that here. We were just kind of trading on both sides of same day VWAP. We made one little rally back up here towards this 3051, but quickly ran out of gas and pressing a little bit on the lower end here, 3036. Take a look at crude oil. That's already taken a pretty good little dip here. So with that, we'll go in and touch on the news. So Australian and New Zealand dollars head for a solid into a stellar quarter. The Aussie and New Zealand dollars edged ahead on Tuesday. The stock markets went higher once again to the benefit of other risk assets, though concerns about the spread of the coronavirus globally kept a lid on gains. The Aussie firmed and continued the recent follow the lead response to seesaw swings in equity markets. The extent of the uncertainty about the global outlook has also seen its trading range narrow sharply in the last few days. Support now lies 68.40 and 68 even. It was a solid into a stellar quarter, which saw the Aussie rally more than 11% in the past 3 months, its best performance since late 2010. The Kiwi dollar was up a shade at 64.23 and has behaved much the same, with some clarity on the pandemic needed to break the light trading range. The Kiwi is up 7.7% for the June quarter, the biggest gain since mid-2011. Stronger demand for bonds suggests investors' fear of a resurgence of the virus will restart economic recovery globally, even as others buy stock on the expectations of further stimulus. Reserve Bank Australia's Deputy Governor Guy Debelle on Tuesday reiterated the bank would do whatever was necessary to support the local economy, while also noting the downturn in the economy or activity has been dire as first feared. Debelle is implicitly supporting the extension of the fiscal stimulus and support measures, saying that fiscal and monetary support remains warranted, said Craig James. Debelle did, however, rule out a shift to negative interest rates, which some analysts have been touting. Safe haven currencies softened as the signs of recovery fan risk appetite. Safe haven currencies were on the back foot on Tuesday as hopes of the economic turnaround boosted riskier assets like the Aussie and the Yuan, although worries about a blowout in British public spending kept the pound under pressure. Spurring fresh optimism on the U.S. economy was pending home sales, which showed the housing market activity quickly recovered in May from a plunge triggered by the pandemic. On the whole, the market is cautious, said Minoru Uchida, chief currency strategist at MUFG Bank. Both on the year and compared with late February levels before the pandemic, the four G10 currencies that have current account surpluses, the yen, Swiss franc, euro, and the Swedish krona, have strengthened against the dollar. Starting trade at 22.97 after sliding to a 1 month low of 22.52. This is a moment for Rooseveltian approach to the UK, Johnson told the Times Radio on Monday, referring to former U.S. President Franklin D. Roosevelt's New Deal program, which included massive public works projects to help the United States deal from the Great Depression. There was also doubts about whether Britain will seal a trade pact with the European Union, as little progress has been made. U.S. Federal Reserve Chairman Jerome Powell said late on Monday the outlook for the world's biggest economy is extraordinarily uncertain and will depend on the containing the coronavirus and on government's efforts to support the recovery. The epidemic showed few signs of abating as Arizona ordered the closure of bars and gyms, joining other Sunbelt states like Florida and Texas in reversing reopenings. The bankruptcy of Cirque du Soleil highlights the fact that the showbiz tourism sector will continue to suffer. The economy is still barely tottering, said Yokosero. The Canadian Entertainment Group filed for bankruptcy protection on Monday as pandemic forced the famed circus operator to cancel shows and lay off its artists. And lastly, Asia stocks up as China PMI and U.S. data help cap a stronger quarter. Uh, Asian shares advanced on Tuesday as a positive economic data from China and the U.S. helped to close out a strong quarter. The divergence of the domestic recovery and foreign orders contagion contractions highlights that the Chinese economy remains affected by the global situation with the COVID pandemic. As new infection cases globally continue to grow, we believe China will continue to face a contraction of exports in the coming months. On the whole, Asia ex Japan shares were on course for a 17.8% gain for the quarter, which would be the biggest quarterly increase since the quarter of 2009. Overnight moves in the markets were not large, but one does uh, get the distinct impression that the markets have got it both ways, with equities rallying on data and bonds rallying on dismal COVID news. The yield on the 10-year Treasury notes was a little changed at 6.99, 62.99 as traders braced for U.S. non-farm payrolls data on Thursday. Federal Chairman Jerome Powell said Monday the outlook of the world's biggest economy was extraordinarily uncertain. A recent resurgence in coronavirus infections has led some investors to question the strength of a rebound in global economic activity. With that, we'll go on and move into the analysis. As you can see, we've kind of slid a bit on the backside here with equities, and certainly that's showing a little bit of immediate effect here in the currencies. You can see quickly we were just on our highs and we've gone and dipped a bit here in the euro. Same also to be said here. You can see here with the gold still on the back foot and cable just paring back just a bit. So with that, we'll go on and get into our analysis. So the euro made a path on Monday to the upside, but rolled back. Resistance will be 12.94 with support at 12.10. So relatively quiet, although you can see here we got as low as 12.04. We had support at 12.10. So we'll stick with the 12.10 and resistance at 12.94. made that push up on Monday, but we just didn't do whole lot with it. But kind of holding here at this support area. Let's go move into the cable. Onto the cable. Cable paired back into a confluence of a 78% as well as a 38% back into a level support. You can see the 38% back from those lows back at way back from 1450. We also had a 78% from the lows here. So a nice confluence. Support's going to be 2277 with resistance at 2364. And low so far has been 2258 because we did get the GDP out. And we had this level here at the 2247 here. Bear with me. We've come into some nice confluences. As I mentioned, the 2276 here with the 38% of the move from 1450. Also the 78% back from the lows right here at 120 and 2072. So we did press a little bit lower here. Tell you what, today the low's been 2258. I don't want to say completely, but it seems like we're pretty well stretched so far at the moment. We said 2277. Here's this 2247, and that's the real key. And we had 2276 at 38%. We'll take a look at it here on the 2-hour chart. You can see right here, this hammer, that would be support coming right across it. Take a look at that real quick. Right there, the body on that. You see? So that would be support, which would be then 2267. And resistance at 2364. That might be a little bit of a stretch there. Resistance is actually going to be this body touch right there, which is going to be 2344. 2344. Let's go move into the Aussie dollar. Well, the Aussie dollar, there's no changes. Look at this. This thing has just been as quiet as all get out. I mean, just look at that. There's no change here. So yesterday we had resistance would be 69.31 and support would be 68.07. And we're just, look at that, tight as a drum, just no movement. Actually, the Aussie had only a 50 pip range yesterday, and the range is even tighter today. The range is 68.44 to 68.80. Holy smokes, it's a 40 pip trading range. Yesterday was just like, I think, 52. So no changes here in the Aussie. We're seeing the same thing as, no surprise, the Kiwi. Look, same thing here, just dead as a doornail. No changes here in the Kiwi either. So support's going to be at 63.83 and resistance at 64.93. And we're just trading so tight. As I mentioned, see, holy smokes, we're trading in a 30 pip trading range. So no, obviously no changes. Moving on to the dollar CAD. So the dollar CAD cleared resistance level, and I don't know why I didn't save over here. Yeah, because it didn't save the data from here. But what I had was, let me see what bear with me one moment, I'll pull up the analysis off of that. Hang on. It ticks me off that I didn't save it, my notes. Okay, so it says the dollar CAD tagged the 37 level on Monday, unable to generate further upside. Resistance remains 37.27 with support at 36.42. So let's go back here. So once again, just to recap again, the notes are the dollar CAD did tag the 37 level on Monday, but was unable to generate further upside. Resistance will remain 37.27 with support at 36.42. So we'll see what we can do with that. Let's go move on to the dollar peso. So the dollar peso closed above 23 even on Monday. Resistance will be 23.28. You can see this level coming across here. 23.28, which is that body right there. On Tuesday, we supported 22.75, but look, we're trading in a very tight range. Holy smokes. Look at that range. 23, essentially 23.02 to 23.15. Oh, wow. So once again, it's going to be 23.28 on the upside. Support's going to be 22.75 if we do see a change. Doesn't appear likely. And we'll move into the dollar yen. Okay, yesterday, we had our resistance at 778, and that caught the high. Let's see what we have here. The dollar yen saw a solid close on Monday. Resistance remains, so we're going to keep the resistance the same. Resistance remains 778 for the bulls to take control. So we haven't, we tagged it yesterday. That was our bias chart resistance, but it wasn't able to take it out, and we were going to stick with that. Remember, we said for Monday's notes, hey, we can bounce around here, a little bit high here, a little bit, but it's not going to mean anything until you get past 778. And essentially, that's exactly what happened on Monday. Went right to 778 to the pip, and then they paired back, and that's going to still remain resistance. And support moves, we will move support to 719. So 778 is going to continue to remain resistance. And the only difference is we will move support up to 719. Let's go move on to the cash dollar index. So the dollar index did not capitalize on its gains from Friday to make a push for the key level of 97.89. Resistance will remain the same with support also at 97.05. So we did move up a little bit higher this morning, around that 97.71, which on a 2-hour chart, not 2-hour chart, but on another shorter time frame, is a little bit of resistance. But the key resistance, just like I was saying yesterday about the dollar yen, about that being 778, the key resistance here is still going to be 97.89. That's going to stay the same. And if we do get a turnaround, it's going to be, our support still going to remain the same, 97.05. Even though you can make a case, well, we're a little bit higher, you might be able to move it up here to 97.20, which is true. On a short-term basis today, you could be looking for 97.20. But the real resistance, just like we were saying about the dollar yen, is not going to come into 97.05. I guess if you want to look at it on a short-term basis, we'll put the 97.20, considering where we are right now. But the real pivot is going to be 97.05. But we'll put in for today is 97.20 since we've worked a little bit higher. With that, we'll move into the cross rates. Well, there's no changes here. Look at the Kiwi yen. I mean, it's just dead in the water. We have pushed a high, and we had 69.51. Yeah, we're only at 69.25. So no changes here, 69.51. The only difference is in the downside, we can go with this body right here, which is 68. That's cutting it too close. No, it's still going to be 68.18 right here. 68.18. So no changes here. 68.18, 69.51. Let's go move on to the euro yen. Well, we did see a nice close on Monday as we get into the quarter, and the Kiwi or these antipodian currencies have appreciated further. We're going to go, I don't think they would make it up in here, but this would be the key level above 21.51. So we're going to go with that 21.51, although it looks like the market is going to be well contained in here. But we'll go with 21.51 on the upside. On the downside is going to be the bodies right here, right to that close. 20.41. And move on to the euro odd. Oh, we are not going anywhere with this. Look at this. Just we pushed a little bit higher on Monday, but key resistance remains 64.96. And on the downside, 62.56. So no changes here in the euro odd. Well, we're not going anywhere. You can see right here. Look at this. Just a slight hair higher, but that doesn't change anything because resistance is still going to remain to 75.94. Right there. No changes. So we're not even moving right now. On the downside for support for Euro Kiwi, we do have 73.53. And like I said, we're trading in such a tight range. It is just ridiculous. Look at this range we're in. 78.41, I mean 74, 74.81. So trading essentially a 65 pip range. And you know, look, we're used to some a little bit wider ranges in here. So no changes. Euro Kiwi 73.53 with 75.94 on the upside. And let's go move into the Aussie yen. Well, it looks like we're trying to break. Just trying ever so hard. Resistance is going to be 74.26. You can see that there. With the downside at 72.75. Trying to break a little bit, but not doing too well breaking out. But a little bit of a jab up there. No changes there on the Aussie yen. And with that, we'll go and move on to the guppy. Well, we're just languishing near these lows. Same thing. Some of these markets, I mean, I can't believe there's simply just no movement. Right now, the only thing that seems to be moving is the majors. I mean, these cross rates are just absolutely dead in the water. We had 31.51. That's going to remain the same, 31.51 on the downside. On the upside, we had 33.42. We've been as high as 33.63. The only difference is, I'll tell you what we will do is we'll go with this trend line here and confluencing with this body. So I'll show you right here. Right there, which would be 32.92. So we will move that to 32.92. Actually, that even lowers it. Let's go right there with that body right there. See where these close right here. 33.31. And finally, we'll wrap up with the starting odd. And you can see here we're sitting right on support. We tagged it 78.60. So that's going to remain the same. The only difference is on the upside, it's going to be right there. Right there. 80.75. 80.75 will be the resistance. That will lower that just a bit. And with that, we'll go and take a look at the equities. Go back there. As I mentioned, we had actually made a run up here towards the 78% back, which was 30.60. Confluence in here with this 30.62 pivot. And we've rotated lower, and we're just kind of stuck in a relatively quiet trading. You can see here, look on a 5-minute chart, they're just not even moving. With the exception of this quick pop, we've been mired basically in an 8-pip trading range for the most part, with the exception of this quick pop. Yeah, an 8-tick trading range or 8-handle trading range for about an hour now, or over an hour. So we're just trading relatively quiet. When we take a look at crude oil, that's just trading 39.42. We did see that pretty good pullback from 41. Did come off quite a bit, and we're just kind of middle of the road in it right now. And you can see here, just relatively quiet right now. Although you can see here on the 30-minute, we're about ready to generate a sell signal here. And volume isn't anything of any significance. We did see it about an hour and a half ago on this move, but you can see, as I mentioned, relatively quiet trading. Going back to the FX futures, little quick dip here. We just saw the SPOOs drop down to 30.33, and you're seeing this reflected here as the dollar got stronger versus the cable. And not that much of a difference here with the euro, though. Not that much of a difference. But we did see a quick little pullback here in the cable. Looking at gold, relatively quiet overall. We did see that little bit of a pullback from the 1788. We lost about $4 as the spruce took a dip from about the 30.57 area and went down into the 40s, low 40s. We saw a quick $4 dip in gold, but we're still trading overall firm and relatively quiet at this point. You can see here the cable. They came up here and we talked about they were challenging the same day VWAP. We've kind of rotated a little bit lower, but it is relatively quiet trading. And there's the Canadian currency. And you can see the pullback we got in gold. Quick $4 move. But we've quieted down. So right now these markets are very, very quiet at this point. Not really a whole lot going on. But as I mentioned before, you can see here we came into some very good support here with cable. And we do have a little bit of a mini hammer here. But once again, like I said, we're not seeing much of a reaction on either side. These markets are very quiet at this point. It looks like we may not see a whole lot happen until we get into the U.S. session. Although we do have at the top of the hour, we do have Eurozone HICP flash coming out at the top of the hour, as well as Italian consumer price. And then an hour later after that, we will have Italian producer prices. Don't forget that at 8:30 Eastern, we will have Canadian GDP. And then we don't get any U.S. news until we get into 9 a.m. Eastern with Kay Schiller. And then we do get Shy PMI at 9:45 Eastern, along with consumer confidence at 10 a.m. Eastern. So that'll do it here, and we're going to get the bias chart posted in the chat room, and we'll see you then. And thanks for joining us here on the European Crossover webinar.